Hello everyone, Ladislas Maurice from The Wandering Investor. So today I'm in beautiful Singapore and I am checking out one of the world's largest private vaults for precious metals, art pieces, etc. And I'm here with Gregor, who is the CEO of this private vault. Gregor, how are you?
Very good. Thank you for visiting.
Yes, so we'll be visiting all of the facilities in detail, looking at the safety deposit boxes, getting an idea of the services that are offered, the pricing, etc. But before we do all of this, Gregor, can you explain to us why Singapore as a jurisdiction? Why did you choose to build this company here?
So our focus has always been towards systemic wealth protection, meaning we are worried about where the world is heading towards. If you're worried about that, you have to look, how do I protect my wealth? So gold and silver makes a lot of sense if you own it physically, because it's apolitical, it doesn't have counterparty or jurisdictional risk stored properly, but it's physical. So you need to decide, where am I going to put it? We have many countries to choose, and there are a few countries, Switzerland, Singapore, a few others, which I think make a lot of sense nowadays. And we found that Singapore, we thought, is the best choice, and we basically decided to concentrate everything in Singapore and provide this sort of services.
And I think one aspect of your company that's quite different from your competition, because there are other storage facilities in Singapore, is that yours is entirely Singaporean without counterparty risk. Am I correct?
So if you're storing with a company, or if you're storing your gold somewhere, you have to ask yourself how many companies are between you and your gold, and what jurisdictional and counterparty risk you have with these companies. So we wanted to minimize the amount of counterparty risk our client has with us and minimize the amount of jurisdictional risk. And the best way of doing that is to only operate in one country. So that if there is a geopolitical systemic event, we can essentially just go back to the courts of that country and no other country when something happens. So if we were to have a nationalization, for example, in a foreign country, and we would be getting requests about nationalizing gold into a foreign country, we can easily say, no, we don't recognize your jurisdiction. And if need be, bring the matter up with a Singapore court. Many other companies might not have the luxury of doing that because they might be operating in these countries. I think that was an important distinguishing factor that we built the company around.
And I think this is really important because when you go online, you see a lot of these services, like in the US, etc., where they tell you, oh, you buy gold with us and then we can store it for you in the Cayman Islands, in Singapore, in Switzerland. But at the end of the day, you're still dealing with a US company and you're taking on US jurisdictional risk. Here, by dealing with a company that's entirely Singaporean, you're essentially just dealing with Singapore risk from a
jurisdictional point of view, yes. Because we are completely vertically integrated. And that's very unusual in our industry. We can provide liquidity through Silver Bullion. We have the vaulting company, which is a safe house, which is fully owned by us. And the facility we're sitting in is also fully owned by us. And that means, as we say in the US, the buck stops with us. We don't have any counterparty which has any material sort of risk involved. So we don't have to rely on other parties, which then means we have full control. And I've been very adamant in creating systems which are so transparent that any mistake we make is going to be apparent, and that's going to build trust with a client. It's very much been for me to build a better mousetrap and protect the client from ourselves as well. And that's how we built the trust. That's how customers ended up coming to us. And then it's really been a matter of growing one customer at a time, essentially.
Let's go see some of the storage facility right here behind.
Sure.
So it's really impressive. Look, I've been to a lot of gold and silver storage facilities all over the world. This is my first time checking this one out here in Singapore. I mean, this is just part of it, and it is just massive. And I see that you have a fair amount of spare capacity.
Yeah.
So can you tell us about this specific room? Because there's a lot of other rooms. So this is just silver, right?
So this is probably, it could be the highest capacity vault room worldwide. We're talking with Reuters, and they told us the biggest vault thing now has about 6,000 ton capacity. This room alone can do about 10,000 tons. It can hold about 30% of annual worldwide production of silver.
How much?
about 30%.
30% of annual.
So about 320 million ounces. In terms of recycling and mining, it's about 1 billion ounces coming from the supply of silver per year. So we can hold about 32% of annual silver production from all sources. It is truly, from a vaulting perspective, this is very unusual, and we are able to do it because the floor in this building has a 90 kilonewton floor loading. To put that in perspective, a car park usually is 2 kilonewtons, so we are 45 times stronger than a car park, which means I can stack silver up 12 meters high, and that gives me these really high capacities. It means that my marginal cost of storage is very low. And that was one of the ideas of creating all of this, because usually gold doesn't require a lot of space. Silver needs a lot more space, but it's too valuable to put into an LME warehouse where you don't have the security. And so oftentimes silver doesn't have a proper place to go. And as our name says, we are sort of partial for silver. So we wanted to make sure that we have a high capacity, high security storage capacity for silver in particular.
What are the storage costs on an annual basis, roughly, for silver and for gold, roughly?
So it depends how much you store, but from our standard pricing under the S.T.A.R storage program starts at 35 basis points and goes down to 25 basis points per year. To put that in perspective, say gold ETF like the GLD is around 40 basis points. It's quite competitive. When you're going to silver, so it's a bit more, you're looking between 70 to 50 basis points on an annual basis.
Which is very, very competitive. Cool. And there's an affiliate link below. You can, if you use it, you can get a discount on your storage here. This is specifically for silver, so you can help people buy remotely, sell remotely, do the storage. So you can do all of that entirely remotely for people, right? You have multiple programs.
Yes. Essentially, if you want flexibility while still having ownership of your metal, we have the S.T.A.R storage program, where we have two flavors. You can go S.T.A.R Grams, in which case you're buying a fungible amount of gold. You have a gold bar, and you basically buy a portion of the gold bar. And you actually get a report where you see a photo of the gold bar with the exact percentage that you have of all of these. But it allows you to buy $200 each month, for example. Or otherwise, we have the S.T.A.R parcel system, where you're buying specific bars, which are uniquely yours. And in either case, you can sell them back online whenever you want, essentially. Right now, we are accepting sellbacks 24/7. We have a little bit of a limitation in volumes during the weekend because the markets are closed. But I think the limitation is 500,000 during weekends, and then it's basically unlimited during working days.
What are your average spreads, roughly, or premiums versus spot? Let's talk about premiums versus spot for gold. Let's say a typical 100-gram bar, and for silver, roughly.
So for our S.T.A.R program for grams, it's about 2% for gold. When it comes to the actual bars, it's different because it depends on what type of product you're buying. So a coin tends to have a higher premium, but you also have to understand that when you buy a physical premium item, that premium itself can be an investment, because during a crisis, the premium of coins tends to go higher. And for silver, that can be extreme. I mean, they can go up 50% of the value of silver by themselves. When it comes to the coins, we are looking probably more like 2.5%, 3%. But if you go to the 1 kilo bars, so spread is very low. So you're looking at probably less than 1%.
Which is very competitive pricing. I mean, the best place in the world to buy gold, generally speaking, in terms of pricing, is the US. Once you venture out of the US, you go into Europe, Latin America, some parts of Asia, the premiums are generally higher, but here the pricing is very competitive.
It's gotten more competitive over time, and you have to understand that we are dealing with, let's say, retail clients, but we're also dealing with the big institutional clients. And so that means our prices have been, on margins, or have been reducing over time. Especially as we're able to get more volumes in, and then slowly creating this market. And we expect things to get more competitive over time, especially as these larger amounts and volumes are coming in.
Okay, so concretely, the way it works, if I want to use that S.T.A.R storage facility where I can buy, sell, do everything remotely, I just literally go onto your website, I sign up. What sort of KYC do I need to do?
So that depends a little bit on what account you're doing. So
Yeah.
it can be a personal, it can be a joint, it can be a company, it can be a trust. Easiest ones if it's a personal account, in which case we just need to have a copy of your passport. I think compared to a bank, it's a much simpler process, but we do have to have an understanding of provenance of funds, a minimal one. And we will have to have a bank account from which the money is going to be transferred over. And one rule that we have is that the money would have to go back to a bank account in your name. It doesn't have to be the same one.
Yeah.
It can be a different one, unless you want to take delivery of the bullion. Or you have the option of selling in Bitcoin as well, or in purchasing Bitcoin.
Okay.
So that's another option.
So just Bitcoin, or are there cryptocurrencies?
Bitcoin, Ethereum, I believe there's still Bitcoin Lite being accepted, USDT.
Perfect.
And a few others. Yeah.
Okay. So do I need to send you all these documents notarized physically?
Oh, no.
Just online?
No.
So online, just my passport, source of funds, utility bill, good to go. And then I can buy.
Usually within a couple of days, it's all done and you can do it online.
Perfect. And then I can buy with crypto.
Yes.
And then I can sell and can send money back to my account as well.
You need to give us the address on which we'll be sending back and forth. It's something that requires a lot of security. We'll usually have a video call with you, make sure it's being set up. And if you ever want to change it, we'll have the video call with you, as a way, as we know, transactions in Bitcoin cannot be reversed. So it's very important that, there's security on these things. But these are all meant to protect, the client and us in many ways. But as I said, it's, I think, relatively straightforward.
Cool. So even trusts, companies, foundations, etc., fine.
Yes.
Cool. So this is a big advantage. Different structures. You can pay in crypto. The KYC is doesn't need tremendous amounts of paperwork. So it makes it easy, which is, these days doing anything financially, internationally is increasingly complicated. But you're making it easy.
Yes, sometimes it takes 6 months to open an account with a bank nowadays.
Don't get me started.
So,
but then it takes a day to get kicked out. So cool. Before we go to the safety deposit boxes, I'm seeing people working on watches here.
Yes. So this company is called CXS, and it authenticates, repairs, and does maintenance for watches. It will also do evaluation of the watch. It allows people to bring their watch in, and in the near future, you'll be able to put it as a kind of consignment, whereby, let's say you have a $100,000 watch, and you're wanting to put it under storage, which will be held by the safe house, covered by our $1 billion annual loss insurance. And it can be in a bonded facility, so you don't have issues with taxes. And if you decide that you would like to offer it for sale, let's say 120,000, then we have what we call an ask system, where essentially owners can say, I'm willing to sell this watch at, say, 120,000. And we'll then display it to people coming to the facility. Because watch owners, sometimes I say, are a bit like Pokemon hunters, right? They're looking for the right watch. And so over time, we expect to be able to build up quite a collection of watches and have owners be able to sell amongst themselves. So we are not selling watches, we just act as an escrow, providing a small fee in between. And you have the option as well to collateralize the watch. So with our peer-to-peer lending system, which S.T.A.R Grams users can also use, S.T.A.R parcels, you can take a loan up to about 60% of the value of your gold. Average interest rate has been around 5% per year, and we'll be applying this to watches as well. And so if you're a watch owner, you essentially are able to get liquidity out of your watch. And of course, this applies only to a certain type of watches, which are, say, let's say, investment type of watches, which are valued at least $20,000 and above, and we'll have evaluations that's conservative enough that we can make the whole process a very low risk process, basically.
So I have some close friends of mine that have been using this facility for their gold for a number of years, and they have used the system where they use their gold as collateral to get money for other deals, and then they can pay back a year, 2 years later. And yeah, the interest rates they paid was like about 5.5%, I remember. They're really happy with the service.
It's, we had 20,700 loans since we started. It's been around for about 8 years. We've done about $900 million in loans. We never had a default. And the reason we never had a default is that we're very conservative in giving the 60%, 65%. We also have a so-called sweeper fund, which essentially is a bunch of money sitting there. When one party is late in paying, the sweeper fund will make a short-term loan to the party which is late to make sure the counterparty gets the money on time. The sweeper fund basically acts as a kind of insurance in case somebody is late in payment. Worst case, we always have the collateral anyway. But that basically made the system very, very smooth, and not having a default in 20,700 loans, is a good track record, basically.
Impressive. And do you have any sanctioned countries that you can't deal with?
Yeah, so we are falling under the laws of Singapore. I would say it's the countries which, we would not be able to accept as, the usual Afghanistan, North Korea. We cannot take Russia, or it's quite difficult with Russia. So it's basically the usual, set of countries.
And you take US people?
Oh, yes.
Okay. Can you elaborate a little bit on the situation for US people and their, again, this is not tax advice, speak to your own tax advisor in the US, but generally speaking, the way some people have been interpreting the rules in terms of disclosure and all that?
So one thing to understand is when it comes to taxation or other matters like that is, are we a financial institution or are we not a financial institution? And the answer is we are not a financial institution. There is intergovernmental agreement between the United States and Singapore, FATCA, basically, which defines what a financial institution is and what's not. Usually, the American definition is very broad. It says anybody dealing in commodities can be seen as a financial institution. But in the context of this intergovernmental agreement, Singapore says this is too generic, because grocery store selling an apple might be seen as a financial institution under that definition. So it was defined as somebody dealing in commodity futures. We only deal with physical. So we are not a financial institution under Singapore law. We are not a financial institution in the context of the agreement with the United States. So does that mean when you're storing gold with us, that it's a financial account? Well, we are not a financial institution. Whether your tax advisor thinks that the fact that you can go online and you can sell something online makes it sort of like a financial account, that's essentially for you and the tax advisor to determine. But another alternative, which is where we're heading to now, is that you can choose to buy a gold bar or something else, and you can put it in a safe deposit box. Cool. And if you put it in a safe deposit box, then the US tax authorities, the IRS, is very clear that a safe deposit box is not a financial account. You're just renting a little area, a safe space, and you put something in. One important thing I think to point out is a safe deposit box is defined as us not having access. So it's the fact that you cannot go online and sell something back.
Okay.
And you are the only one having access to it, or your authorized representatives.
Okay.
That makes it a safe deposit box. And so from a taxation point of view, it's quite clear that it's a non-reportable item. But of course, as you mentioned, always check with your tax advisor.
Cool. Theoretically, Americans can then come here, just buy gold physically. You offer the service, put it themselves in the safety deposit box, and then they're good. Or use a lawyer here, give power of attorney to a lawyer to do this.
Yes. Or, for example, you can have authorized representatives. So if you're coming in and you want your kids and maybe your wife to have access to the box, something happens to you, you're able to set that up when you come here. And so if something happens, your wife or somebody could come and, have access to it. So that's some of the values of safe deposit boxes.
So this is the low security area, because you also have the higher security area, which we went to a bit earlier, specifically for gold and silver. This is pretty much for everything. You can put gold, you can put silver, you can put documents, etc. We're looking at prices. I mean, the small ones, you're looking at about, $200 a year. And then medium ones about, a bit over $300 a year. So the pricing is very competitive from an international basis. Let's go back to the pure gold area and to that segregated storage that you offer online. This I know I always have access to. I can just come here, I have my key, I show my ID, I can have
Maybe
access to this.
I mention a few special features about
Okay.
these boxes.
Okay.
So compared to other boxes in Singapore, these ones are reinforced boxes because the building is a very high flow loading. We are essentially able to put 4 times more weight in these boxes compared to what is usual, at least in Singapore. Another difference is to access these boxes, you need to have 2 keys. So one key is a master key, which is being held by us. The other key is provided by the client. Now, one problem with the system, which is how these boxes usually work, is that I can never prove to my client that I didn't make a copy of his key. And so our client, in theory, could always say, hey, maybe you had an extra key, maybe you accessed my box, maybe you took something out.
Yeah, because if you lose the key, you need to make a new one, right?
And I cannot prove to you that I didn't do something, right? So what we did with these boxes, in addition to having these 2 keys, once you access the internal box, you have a tamper evident seal with a unique number. So when you deposit something, you basically sign a document and you verify that we applied tamper evident seal with a certain number, and you sign off on it. The next person coming will sign off that they removed this. That way we also have a certain trackability. If you have 3 people having access to the box, who last accessed it. We don't know what you put inside or what you're taking out, but we know who is going to have access. And this tamper evident seal provides us with additional form of integrity protection.
Okay.
It also enables us to provide insurance on these boxes if you want to have some.
Cool. So I think we'll discuss insurance later because this is an interesting topic. So normal safety deposit box, then there are the ones we couldn't film. These clients don't quite have access to them. So how does it work from an audit point of view? So let's say I'm buying gold remotely with you through that S.T.A.R storage system, whatever, a few $100,000. It's there, it's sold, I want access to it. How does it work? And what audit mechanisms do you have in place to guarantee that what I'm buying online is really here? How can I verify these things?
So when it comes to verification, the first thing is you have to understand what you're really buying, because oftentimes when you buy something, you think you have gold, but in reality you only have price exposure. You might not really have gold behind it. And so in our case, when you purchase something, you purchase a specific bar of gold or silver with a unique ID set. So it's always uniquely identified. You buy it with an invoice because that invoice is the strongest document to certify the transfer of ownership going from our balance sheet to your private property. And so that's the first part to consider, which is the legal aspect of it. So once that happened, we basically became an agent who stores your property for you, provides liquidity and insurance. But if anything happens to us, our creditors cannot take that gold. We cannot take that gold and collateralize it. We cannot sell it to somebody else. And that's a key thing to understand. You need to have a unique ID of the bar or an identification of it to really have transparency. Because if all you have is a quantity of bullion, you have no idea what's happening behind. So everything we do is by unique ID. You also get, when you buy it, you get a photo of the bar, and you have access to what we call a parcel ownership list, which lists all bars in the system with the anonymous ID of each client. And the reason why that is important is, how would you know otherwise that we didn't sell a specific bar to 5 different clients? So that's another important part. And that parcel ownership list forms the basis for audits.
Okay.
So we have 4 audits per year. From 2 different independent groups. One is Bureau Veritas, one is our financial auditors, and they essentially go and check about 30% of the bullion being there.
30% per year.
Roughly, yes. And when it's being checked,
Randomly.
they put a seal on the box, and unless this box was opened, they don't recheck it next year. And by doing this, over the years, we just go through all of them. But another option for a client, which is unusual in the industry, but which we offer, is that people can come and request a custom audit with 1 or 2 days notice, as we need to schedule it. you would essentially be able to come here and you can say, I want to see my 4 bars I have and 2 boxes of coins. And you can do it yourself, or you can have an auditor. We have some clients which tasked Ernst & Young, for example, to come and do an audit.
So
And
that's typically your family offices, all that do this.
yes, so it depends on the individual. It's important to have that functionality.
And people need to pay for the service.
Yes, so there's a fee to it. It's around, I believe, $400 for 2 hours or so. It basically pays for the personnel and everything else. That's a reality there. So as long as you offer that service, people don't mind paying it, and many other people, once they know it's there and it works, they don't really need to do the audit because it's the fact that it's available, which is a big statement, to the integrity of the system.
And then the auditors you use, so one is a local auditor and the other one is Bureau Veritas, which is, international. They're everywhere.
Yes, it's sort of the standard for the industry, and it's good to have 2 different ones. So we also have, so that was for the S.T.A.R parcel system. For S.T.A.R Grams, we have a newer generation tracking system, which we developed in-house. We call it Gram Chain. And essentially, when a bar is added to the system, scanned, it stores the data and sends a hash of the data on a public blockchain, creating a tamper evidence record. And the system is done directly by the vault operator, so it's a real-time. So it's a real-time blockchain tamper evidence asset tracking system, which then is very good for being a proof of reserve system for gold that is to be used for like a S.T.A.R gram, for tokens, for collateralization, and so on. And we're slowly moving towards that system.
And when I open an account with you guys, one of the remote options, I send my money, and the money is on your account. At which bank is the money stored?
Our primary bank is DBS. So DBS is the largest bank in Singapore. We have another account with OCBC, but usually it will be on DBS Bank, Singapore Bank.
Cool. Yeah. So essentially one of the world's most solid banks. So when you send your cash here, which is interesting. Let's talk about insurance. Look, when I see a facility like this and I think of Singapore, I'm not too worried about theft. You can literally leave your phone in a bar and
people run after you saying, hey, you lost your phone.
So I'm not really worried about, theft here. Scams, not particularly worried either. But what does your insurance cover? Not for this. Let's not talk about just the normal safety deposit boxes, yep, but the bullion storage facilities, the other one.
In vaulting, I think you have 3 types of coverages that you need to think about. The theft coverage is a standard one. There's somebody coming in, forcefully stealing something and running away. You have if something happens, you do the police report, you send the police report, what happened to the insurance companies, insurance pays. Another one is infidelity. That means you have somebody inside the company steal something. In that case, you call the police, you get a police report, you send to the insurance pays. And these 2 coverages are quite typical in the industry. But then you have a third coverage, which is mysterious disappearance. Mm-hmm. And mysterious disappearance really is a key coverage, because what happens if I do have an inside job, but I don't know what happened? So I got away with it. Or what happens if I have a shipment of 100 bars of gold coming and my processes are not good enough, I don't count it correctly. Mm-hmm. They're really at 99 bars, but I don't realize that. I'm storing it as 100 bars. 6 months later, finding out it's only 99 bars. That's a case of mysterious disappearance. Should the insurance pay? Mm-hmm. Well, if you have mysterious disappearance, they will pay. And so we have mysterious disappearance coverage, and that was the result of working with the species inspectors from Lloyd's of London, reinsurers, to really build up the confidence and have the processes which are strong enough to cover for these eventualities as well. And that essentially gives us a very strong insurance coverage. And we can have mysterious disappearance loss for $1 billion, and it will be covered.
What about natural disasters, etc.? Are you covered for that as well?
Singapore is very boring in terms of natural disasters. We don't have typhoons. We don't have earthquakes. We really, even the weather doesn't change much, other than rain or not rain. Essentially, very little happening in that regard. And if you're storing precious metals, you have to understand that it's virtually indestructible. When we had, say, 9/11 attacks, there was sort of gold stored at the bottom of the Twin Towers. And the gold ended up melting. And what you do, you come in, you recover it, maybe lose 0.5% of its value in costs for the remelting, but then essentially it's good again. So even if the building were to collapse or burn down, it's insured and can be repristinated. It's a very different matter for art, but precious metals because they're virtually indestructible in that sense.
What about geopolitical risk? Because I know people like to say, Singapore, it's safe, it's kind of neutral, blah, blah. But I mean, historically, it's right on the Strait of Malacca. If there were to be an actual hot war between, let's say, the US and China, everyone would want to take control of this area. It's strategic, oil comes through, everything. Why, like the Japanese came here quickly?
Well, they kind of conquered almost everything. Well, it is a big port, sure, but the way I would see things playing out is that maybe the first part is to understand geography. So China is well over 2,000 kilometers away. So for China to invade here, they would first have to...
Japan's even further.
They would first have to go through Vietnam, which normally doesn't go well for countries. So it would have to go through Thailand, and so it would have to go through Malaysia, eventually reach down to Singapore. You have to understand that, let's look at World War II. Switzerland remained a neutral country. Because there's a very important role for small neutral countries to play in all of this thing, especially if they're well defended. So Switzerland is well defended. Singapore is well defended. As a matter of fact, Singapore is one of the most highly militarized countries in the world, at about $21 million per square kilometer in defense budget. Most people are not aware, but it is well defended. So from a local regional perspective, Singapore military forces, even though it's just a city-state, is actually quite a lot more powerful than, say, the bigger neighbors like Malaysia. We have 3 times the military budget. We can muster an army of about 420,000 people within a few weeks. Malaysia has about 60,000 professional workers with no draft. Singapore has military bases in Australia, in the United States for training primarily, in Taiwan, in India, as well as in Thailand. And part of the reason is when you're a small city-state, you want to have your military assets in various countries, so you can essentially attack from different directions. And most of Singapore's defense was predicated on Malaysia attacking as a regional item. China, I really don't foresee why they would want to attack Singapore, because Singapore and China have very good relationships. The Chinese economic miracle was based on Singapore. Deng Xiaoping in the early 1980s, he came to Singapore to see how Singapore managed to become wealthy. And they copied the Singapore model in some of the first special economic development zones, and eventually created. A lot of mayors in China are being sent to Singapore to study how Singapore works as training. There are Chinese companies, oftentimes they have big international projects. They will ask for a Singapore company to be part of it to provide credibility and a neutral stance. So Singapore is very valuable in its role of being neutral. And the other thing I think to remember about China is, especially in the West, in the US, there's this idea that China is going to be out and invade other countries. Historically, that's not what China has been doing.
No, that's what the US does.
Well, you take Taiwan, but Taiwan is a special case. Taiwan is a little bit like the Civil War in the United States, having ended up with Hawaii being held by the Confederacy. And now another country saying, no, Hawaii is not a part of your territory. That's a little bit the situation. So Taiwan is a focus point, is something the Chinese, putting their foot down. But you have to understand, when you go to China, Chinese aren't really that worried about foreign policy as much. They're much more worried about the local policy, because they're over, 1.3 billion people? And most of the Chinese are Han ethnic, which is one way why the country is so stable, staying together. They have a few minorities, and the bigger you get as a country, the more problems you have in keeping everything stable. So the Chinese are not going to go out and try to conquer Vietnam and other countries and so on, because it's getting more and more complicated to stabilize, and they don't need more people. I think that what China wants to do is grow economically, and it wants to defend its interests because it feels hemmed in by the United States. And so a lot of what we're seeing is a response to that increasing number of tariffs and other things. And I think the real war is not going to be a hot war. But the concern I'm having is that we might end up with a financial/currency war. I give you a little bit of context behind this. Right now, China, in my opinion, is preparing for a potential retaliation. And the way they're preparing is that they've been reducing the amount of US dollars they're holding. So we are about 772 billion US dollars being held. That's down about 23% from 2 years ago. So they're not buying more debt, and they're letting the old debt expire.
Yeah, they're de-risking.
At the same time, the price of gold, the spot price in China, is higher than outside of China. If you have an import permit into China, because you need a permit to bring gold in, and there are 18 international banks which have this, then you can make free money by taking gold from outside of China and bringing it into China. And that's why a lot of gold is flowing into China right now, which is not necessarily being captured in the official statistics. And the next part is that China does not allow net exports of gold. So to give you an example, if you're a jewelry vendor in Singapore and you want to have jewelry being manufactured in China because it's cheap and good, you would first have to ship in gold to get the same amount of jewelry back. But there's no net selling of any gold going out. And so you take these things in context and you're seeing that there's a strive towards accumulating more gold in real assets and decreasing your reliance on the US dollar. Why? The United States is doing three things now. They are blocking certain industries almost completely, right? When it comes to chip making industries. And remember, the US isn't just telling its companies you're not allowed to transfer. They're telling Dutch companies and other companies throughout the world, you're not allowed to sell chip manufacturing chips to China. And of course, that's upsetting to China. Then they're trying to destroy Chinese champions, companies. You take Huawei, right? There was a very explicit, very targeted way of trying to prevent Huawei from growing more. Why? Huawei had something like 130,000 researchers. I mean, how can Apple even compete with Huawei, right? So it's a big threat. And the United States decided to just kind of try and eliminate it. So that's something that's going to upset China. And then you have the broad-based tariffs, 25%, we're hearing 35%. Trump has recently been saying they want to put 100% tariffs on countries which don't use the US dollar, right? So the combination of these three things are making it so that China is becoming less and less reliant on the United States. Because the more tariffs you put in, the more you lose the power to put more tariffs. And the greater the likelihood that there will be retaliation at some point because you're reducing the cost of retaliation. If I don't trade with you, there's no cost for me to do something bad to you.
Yeah. I mean, they've learned from what happened to Russia. That's it. They're preparing.
And so unfortunately, in the United States, every party is just competing on who can put more tariffs on there, mostly because of local politics. And creating China as this image of this huge monster which is coming up, which isn't always, fully true. There's a lot of internal politics in the US associated with this. But the net effect is that at some point, China might retaliate. And what I mean with this retaliation is if China were to say, I'm going to dump all my US dollars and I'm going to make it illegal for Chinese companies to accept the US dollar, then all trading partners to Chinese companies would have to sell the US dollars to buy some other currency or something else to trade with China. And that can be a huge blow to the US dollar. Because the United States dollar has such terrible fiscal deficits for so long, so much debt, it's only backed by the trust people have in the United States dollar, right? This could cause a huge problem for the US. And the US would look at it as a financial attack. And one retaliation the US could do is to just embargo or sanction every Chinese company who doesn't accept US dollars. And if that happens, you have a stop of trade. Because if I cannot accept US dollars and I cannot accept yuan, and anyways, the banks might no longer allow the transfers anyway, I'm not going to ship you the goods. And then world trade is going to hold. And I think that's the critical phase where if trade stops, eventually you could start actually with a hot war. Taiwan and so on. But China wouldn't be coming down to independent Singapore. And this, whatever's happening will be around the Taiwan area. But hopefully we wouldn't come to that stage, and there will be a way of restarting trade. And that's where the book I mentioned earlier, Currency Wars by Jim Richards, he was one of the people who played financial war games in the Pentagon. He was playing China, and he simulated scenarios like this, and he was able to restart trade by saying, as China, I'm going to put my gold in a neutral country that other countries can also trust. And from now on, because we don't trust each other's currencies, we can trade using physical gold stored in a neutral country. And we'll just net out every day these trades. And that was a way of restarting trade. And then later you can figure out something else. But gold is that apolitical fallback thing which everybody can agree to trust. And Singapore is this country, along with a few others, where most entities will also be okay to trust Singapore. And I think that's going to become a very important role. I call it the sovereign gold hub sort of function, which I think in the next years, there's a real chance that some of these things might be happening. And I'm trying to, and I built this facility partially in view of these sort of developments.
Look, look, I'm really impressed with what you've built here. Like I said, I've been to a lot of facilities, and this one really trumps them all. Great. So if you're interested in buying gold or silver remotely, using all these services, or opening one of these safety deposit boxes, there is a link below, an affiliate link. You can get some discounts. So Gregor was kind enough to extend a discount for people who follow this channel. There's a link below. So Gregor, thank you very much for your time today.
Thank you.
Really appreciate it. Make sure to download my free ebook, 12 Mistakes to Avoid When Investing in International Real Estate, which you can find on my website, link below. And feel free to follow me on Instagram @TheWandering Investor. I look forward to hearing from you.